Hello and welcome to another update video about Bitcoin. The price has dropped today a little bit. We've seen a bit of selling pressure. I mean, everybody who's been watching these videos basically knows about the ins and outs of this chart at the moment. So it probably makes sense. It makes sense to focus really on the shorter time frame today. But for everybody's benefit, especially people who are new to the channel, I want to take you through the larger count here, the larger degree count, when we zoom out and take a look at the movement of the April high. So the idea is still that we are in an overall bullish scenario. Maybe I go to the 4-hour chart just to show it to you. Idea is that we've got this 1-2 setup, which bottomed on the 10th of March, and then another 1-2 setup. The move down certainly looks corrective at the moment, and as long as we're holding the yellow support range, we should be able to move higher in a third wave rally. That is the 22K level. So this is a larger degree bullish scenario. Theoretically, the price can use the entire yellow box to max out if it needs to, and all of this would still be acceptable within the realm of a wave 2 correction. However, I don't necessarily expect price to come down all the way to 22K. It is, however, a very, very choppy price action. So I think we are here in such a complex correction, which has now taken such a long time, that you just need to expect that counts will morph a lot in the coming weeks. I did say that before because, first of all, that's always the case in a correction. And then this is getting or becoming such a complex correction, especially on the lower time frames as well. You just need to be aware that the count will change. So there's no point in being very stubborn here and trying to force one count. We need to be flexible in the current situation. From a trading point of view, I think it's important not to overtrade, to scale down a bit, to reduce position sizes, maybe widening stops a little bit, because otherwise people are going to get caught out. There will be, I think, retracements where we don't necessarily expect them, because we just see this choppy price action. And again, I said it before, we call it choppy because it chops novice traders to death. It is what it does, it just kills them, because there's just a tendency to over leverage, to over position, to try to catch every single wave, especially when it's boring. So people trade out of boredom instead of waiting for the high quality setups. So one of the big mistakes as well. Being bored is one of the emotions as well that kills traders, because you cannot wait. You're patient. You're not patient, and you're not waiting for the high quality setup. So people take trades out of frustration, and then they either have used all the money, which they then need for higher probability counts or setups or the high quality setups to take the opportunities, or they just get chopped up. Now that's why we need to be ready. We need to be flexible here in the current correction. This is going to change in an impulse. In an impulse, you have very well-defined parameters, and there is less of a disagreement between analysts. Now, in a correction like this, you can have 2 or 3 or 4 or 5 different analysts, and you get 5 different interpretations. That's not necessarily the case in an impulse, where the parameters are very well defined and they are tradable. Stops can be tighter, and so on. So in a correction like this, the qualitative aspect of Elliott Wave comes more into play, the more interpretive aspect, whereas in an impulse, things are fairly clear. Okay, so if we look at this structure, the short-term bearish count still suggests that this is a WXY structure. We're basically in the Y wave, and in the Y wave, we developed an A wave, a B wave, and we're now likely in the C wave. Alternatively, I can count that as a WXY structure, which would maybe not come down that low and might be okay with just touching here the lower trend line of our trend channel and the Fibonacci level, the 50% retracement at 25.3K. Now let's zoom in. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. And here we've got this shorter time frame Elliott Wave count, where we say, okay, we came down in this A wave, bottomed on the 12th of May, we peaked here in the B wave, topped on the 28th of May. That's been the view for a week now or so, and well, since the 28th of May, right? And we're now coming down in this C wave. We already developed a first impulse of this high to the downside in a wave 1, in a wave 2, in a wave 3, in a wave 4, and a wave 5. We talked about that before, that the wave 5 was probably finished here. We call that a wave 1, a larger degree wave 1. We're now probably moving up in this ABC structure as suggested in the previous video, already shared a few hours ago on Discord and Telegram, that it is likely price will come down to this support area. We've nearly touched it, so let's see if we can still do that. So I already shared the modified count with channel members just before the drop occurred. So the idea was that in this wave 2 here, we are still working on the wave 2, but that we had an A wave to the upside. This here is a smaller A, B, C wave in B, and we would move up in C next to finish off this wave 2. So you get an A, B, C correction, and this is likely as long as the 78.6 retracement level is holding at 26,680. A drop below that would make it rather weak and will most likely lead to a direct drop down, which it definitely is allowed to do because it's in an overall downtrend. However, at the moment, as long as we hold above this orange support area, it is still reasonable to expect a C wave to the upside, which could take us into the region between 27,500 and 28,050, with a golden ratio in between at 27,730. So at some point here, we're expecting the C wave to the upside, but it's a signal that we get if price breaks below 26,680. We are most likely going to move down directly in the third wave, should then get a fourth wave or a fifth wave. Or alternatively, if this is not an A, B, C, but instead of just a WXY, then this here was the A wave, this is the B wave, and we come down in the C wave, and that could stop at the channel support around 25.3K. So these are the interesting developments here. So the idea is if the A wave topped here, and let's say the B wave might come down sort of, you know, maybe to 26.9K, maybe a little lower, but we can already calculate roughly what is the target for the C wave, that we take the length of the A wave, we go to the low of the B. Now again, I'm just gonna assume now the golden ratio as low. So this might move a little, you know, these targets might move a little bit. So yeah, you can see the 1-to-1 ratio, which is one of the very common targets for such a C wave, points into the retracement area there at 27,580. Now this is a bit of a moving target. First of all, we're here on the lower time frame, and then you need to understand if it goes a little lower, this target will move with it. But this is something I could imagine is going to take place here. So yeah, we had a bit of selling pressure today, but it might just be embedded in this larger wave 2. The reason is the A wave looks a bit impulsive to the upside. This is certainly a corrective wave structure. The move down looks a bit impulsive, so it could be the C wave of wave B, and the move up should look impulsive again in a C wave. But all of that just creates a larger three-way structure, and as long as price stays overall below 28,050, the idea is still that we will head to new lows afterwards. Yeah, and that is my update about Bitcoin now. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.